All right. Good morning. Hello. Hello, everyone. Welcome, NextOppSocial family. Welcome to another live interview here on our NextOppSocial channel. As always, I'm Richelle Wright Wilson. I'm joined by Joanne Buford. And today we're very excited to bring back Miss Tina Williams to the Next Opportunity Social channel. So you can ask any entrepreneur that you meet, and they'll tell you funding and cash flow is the lifeblood of their business, which we were just talking about this and we know that, right? But Tina Williams is the founder and COO of QT Business Solutions, and she stands by that belief. As a former personal banker with JP Morgan Chase and Fifth Third Bank, Tina knows all too well how important it is for small businesses to have continuous access to capital. And that's a big part of what we're going to talk about today. But before we jump into learning more and chatting with Tina and her background, as always, if you're watching with us here, either live or on the replay, please make sure you hit that subscribe button below so that you never miss an interview, a live, or any of these incredible discussions we have here at NextOppSocial. So let's get into it. Welcome, Tina. Thank you again for joining us here today. We're very excited to have you back. And talk through all this good stuff we're going to go through. So for all our new viewers who may not be familiar with you yet, let's jump into having you tell us more about yourself, your background, and what caused you to fall in love with being an entrepreneur.
Okay, well, my name's Tina Williams. Sorry, I have a frog in my throat this morning. I used to be a banker at Fifth Third and Chase. And a lot of times I saw people, great people that were, awesome business owners. They knew what they were doing, but they didn't have the ability to write a business plan. So a lot of times they were not able to go in, get the stuff that they were need because they were not properly prepared to come into the bank. And as you know, as a banker, our job is to get loans done, protect the bank's money. So we can't really do a lot of helping, holding your hand to get that loan through. You have to be the one prepared. So I just kind of fell in love with being an entrepreneur, even before working at the bank, though. I've always been entrepreneurial. I've been a salesperson at 18. I got my financial services license. Not 18, 1999. I got my financial services licenses, and that's a sales position. Banking is a sales position. And so I've always been a person that just loves business. Sorry, guys.
No, you're okay. Take your time.
So then just kind of wanted to help people get into their businesses, learn how to get their money, because I think that's the major thing that is facing African American or businesses of color. I'm going to turn it off when I need to cough. Sorry, guys.
It's okay.
Okay, sorry. All right.
Fantastic. So speaking of business owners needing money, right? One of the reasons why I was really looking forward to this interview today was there's a lot of misinformation out there, right? People know the business owners are, in some cases, they're desperate. And you just don't know what you don't know, right? I was just having a conversation with a business owner earlier today, actually having a conversation with Shelly. Still to this day, 70% of the business owners I talk to, even if they've been in business for 2 and 3 years, they still don't know what an LLC, DBA, S Corp, C Corp. You ask them, how's your business structure? They kind of look at you like, huh? What's that all about, right? And the funding and acquiring business credit and what resources are available to you is like a totally new world to them, right? And one of my biggest concerns recently has been the proliferation of videos, workshops, seminars about how to acquire business credit. And I've seen individuals literally charging folks anywhere from $250 upwards of $5,000. I see you shaking your head. You already know where I'm going with this, right? Charging people in excess of $5,000 to establish business credit. And I said, you know what? We got to nip this in the bud. We have to address this, right? And so For those listening who've never heard of business credit, right? It's just like, what's that? Um, I was hoping you could elaborate. Number one, start with what is business credit and why does it matter? Why is it important? Whether you've been in business for 2 minutes or 20 years, how does business credit fit into the world of funding and growing a healthy business and organization?
That's a good question. So people need to understand that there are kind of two types of business credit. So you can get business trade lines, which you would get like a Home Depot. These are store credit cards or store line of credit for your business. And some of them don't require personal guarantees. So when you have that sort of thing, you are building up something that's called a DUNS score. And then your PAYDEX score needs to be over 80 PAYDEX score. So you can get an 80 to 100. 80 PAYDEX score is a good number. And you are getting people to say, hey, this customer does business with me. They pay on time. And that's important because, I get a lot of stuff with my business credit. I get furniture, into my offices with business credit. I had a Staples business credit card. I buy computers with that credit card. I bought, just everything. And those did not require me using my personal social security number. I had a cell phones in my business credit, those sort of things. Paper, your Staples line, that you could just buy a lot of paper, ink, things that you need. So that is going to be trade lines. And then you have something called cash or credit. Generally, the cash or credit lines are going to require a personal guarantee or personal guarantor, which is yourself. And you will get those from like a Chase Bank or, anybody that's lending you money. Sometimes they put it on the business and they do something called a UCC filing. But it's important that you have established business credit because you don't want to use your personal credit for business purposes. The reason being is when you use your credit cards on your personal side, your score tends to fluctuate. So if you are using a credit card, you need to pay $10,000 on something and you max out your personal credit card with $10,000, then you're going to be 100%, loan to value on that credit card. And then your personal credit score is going to go down. But if you had that credit card on your business side, you could max that out. Nobody would see it. It doesn't affect your personal credit. Okay. Now, if you don't pay it, you'll get sued and then it'll affect your personal credit. But it's not, that's not what it's meant for. It's going to stay on your business side and you pay it. And then you keep your personal side separate and you keep your business side separate. So business credit is really important because your personal stuff should be for your personal stuff. You need a personal car. If you need a house, if you max out your personal credit cards and things for your business, when you need to get those things done, you won't be able to get them done. So that's why having business credit separate from your personal credit is very important.
Now, I want to dissect this a little more. You knew I was going to go here, right? So, because in the business world, for those of us who've been in business for longer than 2 minutes, we start using diction and jargon that laypersons just don't know, right? So you mentioned PAYDEX and your DUNS score. And when I hear that, when I think about it on a rudimentary level, what I hear is, about Equifax, about Experian, about TransUnion. That's for personal, right? But when you talk about a DUNS score, you talk about PAYDEX. That's almost like they play the same roles for business credit, right? They play the same roles. That's your credit score for your business, right? The other thing that I heard that I wanted to make sure we got some clarification, I know there's a lot of misinformation about this, right? With your personal credit, you said loan of value. And basically what you're saying, and you correct me if I'm wrong, or you want to elaborate, is that if you have $1,000 available personal credit and you use all 1,000 of that, means you used up 100% of your available personal credit. Your credit score is going to tank because you did that, because that's a no-no in the personal credit world, right? And if I recall, Tina, what people really need to stay at is about 30% of personal credit. The moment you start going over 30%, your credit score starts to get killed, right? But with business credit, is it not true that you're actually incentivized, right? It actually improves your circumstances if you're using your credit and you have a payment history. And that's one of the primary differences, right? I know a lot of business owners who establish credit and they don't use their business credit because they're afraid that if they use it, your score will tank, just like on the personal credit side. Do you mind elaborating on any of that?
Yeah, that's the reason you get your business. The bank wants businesses to have credit. Number one, businesses always have cash. So, banks are in the business of making money. So they want you to use your business credit. If you use your business credit, it won't affect your personal credit score. And like you said, the more you use your business credit, the more banks will want to lend your business credit. So,
Mm-hmm.
they'll say this business pays their debts back, and they'll give you more money to do things like hire more people, because what does that do? That stimulates the economy. You hire more people, unemployment goes down. The city that you're living in gets taxes because you have, city state unemployment, and those employment taxes. So it's beneficial for banks and the government to incentivize you to get more money into your company and expand. That's why companies that are big start getting bigger, because now they know how to use that credit. Banks see that they can hire somebody and create revenue. So then now you're going to lower unemployment, and you're just going to create economic development. So it's just a smart thing to do for banks and for the government to let businesses have money.
Yeah. And of course, the banks earn a lot of money on that too, right? Which is why they also want some incentives for you to use that credit. Okay, so trade lines, you mentioned that, right? And there are three schools of thought that I'm seeing out here in the quote unquote social media world, right? You have some people who say, well, because of what's transpired in the pandemic, banks have changed their guidelines. And so trade lines just aren't that effective anymore. So you hear that going on out there, right? Then you hear about individuals who will say, well, there are trade lines that you can buy, right? And basically what they're saying is if you buy a trade line, you're basically buying credit history. And as a result of buying credit history, that improves your credit. And so you should just go out and get as many trade lines as possible, right? You hear that going on out there in the world. um, and then, there's this thing that people are talking about where not only can you acquire trade lines, and if you could elaborate on the organizations, right? Because people want to know, okay, trade lines, what is that? And how do you get it? Like, where do you go for trade lines, or how do you acquire them? And then what I'm also hearing is this strategy that people employed a lot 5 years ago, where they had an uncle or an aunt, they had a sister, cousin, even a parent who had great credit history. They would literally try to get themselves or somehow attach their business to that credit history. And they would call that setting up a trade line. Could you mind elaborating on any or all of those things and then just how effective it is?
Okay. So two different types of trade lines.
Mm-hmm.
You have store trade lines where you go to Staples or Home Depot and you get a trade line from Sears or whatever kind of trade line you have, or gas. I have a gas trade line, where you can buy gas for a fleet. You know what I'm saying? So those are trade lines on the business side. What you were speaking of is buying somebody's personal credit history on their personal side to boost your personal credit, which I'm not a fan of.
Mm-hmm.
Number one, you don't have any control over the person. What if they just start, you bought that trade line and then they just went bankrupt right after that? So now that's on your credit report. You know what I'm saying? I mean, it's just not the smartest thing. Also, banks are kind of hip to that too. So if you're an authorized user, they kind of are hip to it, and they'll kind of take that out of consideration when they're considering you for a loan. Now, one thing that I do agree with is if you have really great credit and you have a son or a daughter that doesn't have any credit, parents can put their kids, not like uncle or, you know, and don't put your kids on your credit if you don't pay your bills.
Right.
Make sure that you put your babies better than when they came. So, you know, that way they get a leg up in society and they come out with the 800 credit score out the gate. I saw that as a tactic when I worked at, I did work in a private client services, and a lot of the parents did do that for their children. You know, they had perfect credit, they added their kids to those things to add history, and then they all had 800 credit when they turned 18, and then they were able to do things on their own as well.
Now, how about this ideal that's being circulated out there, though, that you can actually buy trade lines to improve your business credit? So that's circulating out there a lot too.
You can buy them, but I don't suggest it. You can just get your own stuff. I mean, if you are going to buy, just get a secured line of credit and create your own history. You have no control over the person that you buy the trade line from. And banks will see that you're an authorized user too. So it won't count. Just start your own. Start where you are and start your own.
So there's an organization out there that I'm hearing called NAV, where they're saying go there and buy a trade line from NAV. I guess that's what I'm referring to, right? That's being circulated a lot, that you as a business owner can go and buy a trade line from NAV, and then all of a sudden it's going to create this wonderful paydex score overnight because you did that, right? So that's one thing that I'm hearing out there. Could you kind of explain to people what NAV is and how, whether or not that's actually effective or not? And then you also mentioned a secured credit card. So I want to clarify this for our listeners. You're also saying you can acquire a secured business card, right? It doesn't have to be personal. You can actually get a secured card in your business name.
Yeah, you can get a secured loan in your business name, secure line of credit, secure credit card, everything in your business name. NAV is a it's a large, you know, they kind of do a lot of blogs, and their job is to get viewers to the website and then apply for credit cards. So the it's buying trade lines is going to be the same across the board. Banks are going to know that you bought the trade line. So get credit cards. Yeah, NAP is great for getting credit cards because they have like a whole list of business credit cards that you can get from there. A whole list of personal credit cards that you can get from there. But buying a trade line, in my opinion, is not going to help you much more than you getting your own secured business credit and starting your own credit.
I love it. So if you were advising someone on how to get these credit lines started, because people are going to ask them, where do you go, right? What organizations are out there? Which organizations are trusted, right? Legitimate? Where would you advise? How would you advise where for people to start?
So you want to start with, I would say, your local bank, and I would say a community bank. Community banks have to give money to you know, specific targets in the community. So so there's in our area there's CIBC. You got Comerica CRA. They actually pay for a lot of things. The Community Reinvestment Act on different banks require them to lend to certain targets. and stimulate certain targets in the community. Level one, I have a personal banker there. You know her, Arlena.
Mm-hmm.
You want to be somewhere that, they know all of the programs, and then they can actually get you into the right program. So knowing your banker is really, 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 really important. Because if you just walk in, they're not caring for you. You want to know somebody that knows all the programs. So, I mean, you can come to us, QT. We know a lot of the bankers, you know. We know which ones are going to like you and which ones won't. Um, just kind of, you got to start with knowing the banker and going from there.
Okay. So the steps, right? So I'm a spanking brand new business owner. I'm selling whatever out my basement. I've started up some type of service or consulting business, whatever the case may be. I've been utilizing my personal credit, and I'm listening to this and I'm like, wow, there's a world of business credit out there, right? So Tina, break it down, rudimentary third grader. What do I have to do to literally get this ball rolling, right? What are the first 4 or 5 steps I should take before I go to that bank, before I go online to any type of service, local bank, whatever the case may be? What are the things I need to have in order to ensure the likelihood of me being able to get my business credit established?
Okay. Well, the first thing, what I would suggest
Mm-hmm.
is a business plan. That's what I would suggest. Me, I want you to know all the ups and downs before you get to the bank. If you're trying to expand your business, you're selling stuff out of your trunk or whatever, we got to get you to the next level. The next level is structured, business structure. So you want to contact, maybe even you, Jawan, with Legal Shield, so they can get
Mm-hmm.
that LLC or corporation put together, whichever is best.
Mm-hmm.
You want to get you might want to talk to your accountant to decide if you want to be an LLC or an S corp or a C
Mm-hmm.
corp. That would be it. Um, the third step would be go to the bank after you get that business established with the EIN number and articles of incorporation or organization, depending on whether you went with LLC or corporation. Go to the bank, open your business account. Now you're like physically able to do business legally. So then, the next step is, let's take you to the next level. Let's get a business plan. What do we need? Do we need to get into a facility? If not, can we do it online? And if so, what is it going to cost me to do the marketing, to get the amount of sales I need to pay myself? Do I need to hire employees? If so, how much do I need to pay those employees? And how much do I need to make in order for me to pay employees, pay all of my overhead, and me get a profit? Those are things you should be asking yourself up front, so that you can create the life that you want to have. You don't go into business not to create a life. You
Mm-hmm.
went into business to change yourself. So we need to know exactly what those numbers are.
Okay. So I've heard a couple other things out there, right? So there are people out there saying, well, you need to have your own business line, right? If you're using your cell phone number, it's going to be difficult for you to establish yourself, right? Particularly when it comes to acquiring business credit. I've heard that you need to have your own domain name and a spanking website, right? In order to do the exact same thing, like that's necessary. Um, and look, these things are important, but I want to, for the new business owners that's starting out, or the person who has challenged personal credit, needs to know, how do I put my best foot forward, right? I've heard these things, that you need to have those things in place. You have a lot of people out here using Outlook and Gmail in terms of their business correspondence via email. And I've heard that it's bad. You shouldn't be doing that. You should be utilizing a domain name and utilizing a business email account, right? So these are the things that are out there circulating that people are actually charging people money to set up, right? So I want to clarify these things, like how important is that? And then when you said DUNS, what does that mean? Where do you go to get a Dun & Bradstreet number, and why is that DUNS number important?
Okay. So the first thing is I would prefer having a domain name. Now, do you have to spend $1,000 to get a domain name? No. You can go to Google G Suite and just pay, what is it, $8.99 or something a month. It'll come up with a domain name. You'll have a Google My Business page that is for free. And your Google My Business page is going to get you free advertising right off the bat. If somebody's searching for what you're doing in their area, you're going to pop up. You can also have something called a Google Voice number. So that's going to be with your G Suite. So you can, not have your own number there. You can have that forwarding number that you get from Google. And you can be just set up that quickly, and they even give you a little Google My Business webpage that's right on there. So if you just need to get it done quickly, just sign up for the Google G Suite and it's already done for you. Now, if you want something a little bit more better, okay, get a website created, but it's not necessary. But I do agree with the don't do business with, at hotmail.com or at gmail.com. Put your business name on there.
Okay. So another misnomer, and Rochelle, please feel free to chime in. As you can see, I'm looking at I got my grocery list going here.
That
so
second question you had asked, Joanne, about the DUNS, like what is that and how do you obtain that? And for people who are just like, I've never heard that word before.
Okay, yes. So it's Dun & Bradstreet. You just go Google that or D&B, and it'll pop up and you could get a free DUNS number. Get the free one because Dun & Bradstreet will try to charge you. You do not need to pay for it. Just get the free one. And then you'll have a D&B number. Now, if you want to create your Paydex score, most likely you will have to pay Dun & Bradstreet to let some other people report on you. So you're going to pay them, get the cheapest package. If you don't have a D&B number, get the cheapest package, and then get 3 or 4 businesses that you do business with to report what kind of credit you have, done in your pay history. And then you're going to have an 80 Paydex score.
I love it. Now, here's the other thing I've heard. This one I couldn't help but chuckle a couple days ago. So I'm listening to a YouTube video and somebody's saying, look, get the account set up, get your D&B, get your trade lines. And then 3 months later, you can go to the bank and they'll issue like $100,000 worth of credit, loans and credit lines. And now you can start investing, right? Buying property and doing all this other stuff. I mean, realistically speaking, so people can really know what this process looks like, right? So they're not sipping the Kool-Aid. You start this process up. How long does it really take to establish a good credit history on the business side of things? What's the time frame?
So here's the thing, what people don't realize with cash lines for banks, under a certain dollar amount, it's automatically going to require a personal guarantor. So having your D&B, it's great, but it's still not going to cause you to go to the bank and get large lines of credit without a personal guarantee. And if you can't show the bank that you can pay that money back, you have to show actual revenues, you're not going to get it. Banks are smart. They do this for a living. Okay. You can't trick them.
Mm-hmm.
You have to create revenue. Now, if you create revenue and you can show them the ability to pay that loan back, you'll get the loans. So it's not about let's get loans. It's about how are we going to create revenue,
Mm-hmm.
period. Everybody has it backwards. I want access to capital. I want access to capital. Let's make some sales and get some revenue. Okay. And then they'll give you whatever kind of money you want if you can prove that you can create revenue. So generally speaking, loans under $5 million are going to require a personal guarantor. On the other hand, loans over $5 million generally don't require a personal guarantor because your company's big enough and it has paid back enough money that they don't require anybody to be the guarantor on it. It could even be a department head that applies for the line of credit. But you have to create the revenues. That's our job, create revenues. Let's not just say, I want a loan, because you got to pay it back. Let's find the best and easiest way to get clients so that we can actually create revenues. And when we need a loan, we can just say, hey guys, look, I created all this revenue over here. I need some more money so I can create more revenue. And they'll give it to you.
I love it. I love it. Okay. So I'll reiterate this again, right? We're in business to generate revenues, not go out and acquire loans and credit. Because you're right. I mean, that's the conversation I hear from individuals all the time. It's like, look, I've been in the business for 2 minutes, and I heard I can go out here and get $100,000 in loans and credit, and I can get it done in a couple moments. And no, it's the same thing as anything else. You got to generate revenues. You got to show that you actually are operating a profitable business, right? Time frame. What are reasonable expectations for individuals in terms of how long it takes to actually establish a good reputation? And then there's another strategy that I heard out here that I'm not going to say debunk. I'm going to leave it to you, the expert, to deal with it. But there's another one out there that I'm hearing where people can take business credit and they can utilize business credit to pay off their personal credit to improve their situation.
Okay. I'm actually a fan of that if you used your personal credit to do your business dealings. So this is how it would work. Let's say I had a bunch of credit cards on my personal site, and I bought furniture for my office with my personal credit card, and I bought, I put everything for my business on my personal credit card. It's not supposed to be on my personal credit card. It's supposed to be on my business credit card. Okay. And maybe I didn't know about business credit before I did that, right? Okay. I get my business credit card. I go ahead and take the check that you get, the balance transfer check that you get with your credit card, and you move your business debt that you have on your personal side to your business side. So I'm actually a fan of that.
All right. So I want to make sure, because this needs to be clarified, because it's out there, right? You don't go out there and acquire a business credit card and then pay off your personal bills. That's not what you do. It's for individuals who've been utilizing their personal finances to fund their business expenses. And then you can take those balances and transfer to your business credit lines.
Right.
Okay.
They should have been on the business side anyway.
Right.
But a lot of times we didn't know we could get a business credit card or something. So we just but you don't want to just get business credit card pay off. Okay, because I think I know what you're saying. Get business credit, pay off your personal. You're not doing anything on the business. So now you let those things go bad. They're going to come back to you anyway, because they're going to charge off and then you're going to get sued. So it's going to affect your personal credit. The final thing is, if you're in business, do business. Okay. Get revenues and do business. Spend if you use your personal cards to do your business stuff, by all means transfer the balances from your personal side to your business side, but do business.
Yeah.
Do business, make revenues, and pay them off.
Fantastic. So you have companies out there like PayPal, you have Square. There's some other companies out there too, right? That are what I would say, I guess, non-conventional means of acquiring capital, whether it be credit or acquiring loans. And so I know a lot of business owners who, for whatever reason, they're not comfortable dealing with banks. Maybe they have bad experiences because of bad history, et cetera, et cetera, et cetera. So they start looking for alternative companies to do business with, right? Or alternative resources. What's your opinion of that? Are PayPal, Square, and these type of companies really viable ways for business owners to raise capital, acquire credit, acquire loans to finance their businesses?
So PayPal will, if you get a lot of PayPal merchant, so PayPal is like a merchant processing.
Mm-hmm.
They'll take their money off of, they'll loan you money, but they'll take the money off of what is coming through. I mean, it's generally way more expensive than just getting a regular business loan or a line of credit.
Yep.
I would prefer getting a business loan or line of credit over PayPal or any type of merchant processing. Generally speaking, you only have like 6 months to pay those things off, and they're taking daily money, daily or weekly money. And it's, eating into your profit margin. So if you have the ability, get a business loan or line of credit, micro loan. So a lot of people that use PayPal might have like a bruise credit. Okay, well, you could go to a micro lender and you could get a business loan, and you could have bruise credit. So it's just better ways, cheaper money to fund your business.
What are some of, like, when you say like cheaper money, right? What are some of those rates? Like, what are some of these expenses that the convenience of 1, 2, 3 click with PayPal, that's why people do it, right? But what are some of the things that you could educate people on, of like, here's where it's going to cost you more, right? And here's what, like, even if I know it's debatable on what some of those numbers might look with interest rates and whatnot, but what is let's say someone who's got decent personal credit, or now they have, like, they're establishing this business credit, they don't have a whole lot of debt or anything like that, right? They're looking for what a decent rate would be, or what a decent process would be. What does that look like?
So I know with micro lenders, they're going to be between 8 and 16%. With a PayPal or merchant processing, you're going to get it. Let's say you get $1,000 receipt in, you might only get like $300 of that $1,000 receipt. You know what I'm saying? So it's they have fees inside of that. It's going to be way more expensive than 8 to 16%. And also, you with a micro loan, you generally have 3 years to pay. If it's a loan, you're going to have 3 to 7 years to pay it back. With those, you're paying it back in 60 days. I'm sorry, 6 months or less. So you're spending more money, where you could have spread out the debt over a few years, so that you can increase whatever you need to do, your marketing campaign, hiring new people, and you'll have more money right now to do those things. If you are spending all of your money, you don't have money in your company right now to do the things that you needed to do to grow, which might be hiring an advertising team, getting a good lawyer, on your team, or going through and getting the legal shield. Just all of the things that you need to spend money on right now, you can't afford to do it because you're paying that loan off so quickly. So is it really doing you what good to get that loan?
Right.
Probably not. It would do you better to spread it out. And then right now you hire your people and do your things. And then now, you're creating more revenues and you've paid that loan off and you're in a better financial situation.
All right. So, I mean, this is a conversation, Rochelle and I bounce this around all the time, right? Where we're looking out into the landscape, and it's a beautiful thing, right? You have more and more businesses being born every single day. I think that's one of the blessings or one of the positive things that's come out of the pandemic is people finally realize if you believe in job security, you might as well believe in the tooth fairy, right? It is what it is. But also because of the pandemic, people were earning less money. People were on their knuckles. So, they're falling behind on their mortgage. There's going to be a lot of foreclosures over that moratorium. They're not going to extend it again, right? So a lot of people are going to get crushed as a result of that. You're going to have a lot of evictions. People are behind on their rent, right? So evictions are going to show up on people's credit in a big way over the next year or so. You have individuals who literally falling behind on their cell phones. I mean, I'm just being real, right? You talk about Detroit in particular, I think the moratorium ending, I think the evictions and all this swell, the stuff's getting ready to happen is easily going to impact 1/3 of Detroiters. So, for lack of better words, I'm trying to find a way to be coquettish about it. I just don't feel like it. I'm tired. It's going to be a shit show. Right? That's what it's going to be. So you have people with damaged credit, finances all over the place, but they want to start up businesses, right? What does the landscape look like for them, right? We just kind of went through how you establish business credit. What does that process look like for someone, let's just be real, who have a 525 credit score, got an eviction on deck, they're getting ready to foreclosure on deck, stuff's getting ready to hit the fan, but they've started a business, the business is generating revenues. How do they establish themselves?
So we do need to get them up to a 575 credit score, but
Mhm.
we can get, if you have 575 credit score, we can generally get some business funding. There now though, there's so much money coming out in grants. I mean, I literally just got the Comcast Rise grant a couple of days ago. Facebook had an African American grant, well, not African American, business owners of color grant, and I got $2,500 from that and $1,500 in ad credit, which, by the way, was more valuable to me than the $2,500 they put in my bank account.
Mm-hmm.
So there's so many things out there right now for startup businesses that are in the grant form. You got to get into the pitch competitions. You got to just get out there. If you can show that you can create revenues, you're going to be in a good place. Right now, the government is spending on purpose. They're just giving you money on purpose. They literally just changed the PPP guideline. If you, instead of you having to use line 31, if you have a Schedule C, you can use line 1 and get your PPP on that dollar amount. That's so huge, guys.
Mm-hmm.
Like, so if you don't take advantage of all of the free money that is out here, and PPP has no credit score. They don't even check your credit score for PPP. They check it for EIDL. You got to have a 570, but PPP, you can be, period. Your credit score can be terrible and you'll still get it. So, I would say start applying for grants. I do a live every Tuesday and Wednesday, and I go over grants and I have people apply with me. The same Comcast Rise grant that I got, I applied online in front of everybody, and hopefully people apply with me, and I got it. I applied online for the Facebook grant. I got it. There's just so many out there. There's so much stuff out there.
So we all smiled when you said you can use line 1 as opposed to line 31 on the Schedule C, right? Everybody's gonna see the big chocolate chip cookie dough smiles on all our faces. But once again, you have people who don't even know self-employment tax. You have people who don't know what reasonable income and non-taxable dividends are. You have people who don't understand how to file taxes on LLC, DBA, C or S corp, right? They don't know. They're just getting started. Mm-hmm. Why is that important, right? When you say Schedule C, line 1 versus line 31, elaborate for the individuals who I know are listening in. They're like, huh? Like, what's that?
So if you had excuse me, one moment. My frog voice. So if you have a Schedule C, there's a gross revenue line, which is line 1, and then there's line 31, which is after you spent all the money on all your write-offs, your advertising, you paid other people, you paid contractors, whatever. You might have had a really small line 31, or you could have even had a negative line 31. Mm-hmm. So you weren't eligible to apply for PPP before. But now it doesn't matter if that line was low or negative, because you can use line 1, which is the largest number. So we know the government caps PPP out at one person earning $100,000. So if you earned over $100,000, then what will happen is they're going to cap it at 100. You divide that by 12, multiply that by 2.5, and you're going to have a PPP loan of $20,833. Mm-hmm. Even if your line 31 was negative, which would not have happened before.
Wow.
Yeah, I love it. I love it. Look, we're all about promoting businesses. We're all about promoting our guests. You just slid that Tuesday and Wednesday right on in. We're not going to let you get away with that. Tuesday and Wednesday, Ms. Tina Williams. What time? How can people plug in?
I do a Tuesday live at 5 o'clock and a Wednesday live at 9 a.m. And it's on my Facebook page for LinkedIn. I stream it to Facebook and LinkedIn. So just look up QT Business Solutions. Excuse me. And then I do a grant proposal every day. A different grant proposal, and we kind of go over it.
Every day?
Every Tuesday and Wednesday.
Oh. Okay, I was
Still,
okay.
2 a week. You do 2 a week.
Yeah.
That just shows how much is out there. If you have the capacity to be doing 2 a week, then surely anyone who's listening, some of those are going to apply.
Right.
You know, so
So
yeah, it's fun too. And then some people told me that they got it. Like when I did the Facebook, they said, I got it too, Tina. So just apply with me online and then they got it too.
Nice.
So I don't want to steal too much of Lance's thunder. Mr. Lance Petway will be on next week. Really excited about that, right? But I know as people are listening to this, I don't want to leave too much hanging. I don't want to steal too much of his thunder next week, right? So you got that individual sitting at 525, right? Mm-hmm. I'm in the middle of having conversations with at least 10 business owners who is crazy to me. Like they're generating great revenues. I mean, they're crushing it. But they're sitting on a 525 personal credit score. Mm-hmm. And you said you need to improve it to 575, right? If you're talking to business owners who are sitting in that situation right now, and right now, like I said, I'm just thinking about what's to come, right? I know in the 6 months, we know what's getting ready to transpire. It's going to be ugly, mm-hmm. right? So you're going to have business owners who are generating revenues, who are earning income, and their credit scores are going to be in the toilet because of this different stuff that's taking place. Mm-hmm. So you're sitting at 525. How do you get them to a 575? How does that happen?
Call Lance Petway. So that's my go-to guy for credit restoration. He's excellent. He used to work with me at Fifth Third Bank, and he was a mortgage broker. And, basically he knows his stuff. And like I said, he has some tools that you would be able to use to rapidly increase your score. Even if you're over 575, it can't hurt. If you're not at 800, keep going,
Mhm.
you know, and call Lance Petway.
So, look, I'm constantly paying attention to stuff, constantly reading. I'm that guy that's up at 2 o'clock in the morning, waking up at 5, being a nerd. Like, my brain just wakes me up and I just want to consume as much information as possible. And we cover a lot of ground. Like, I wanted to clarify some of the stuff because it's just bothering me to my core that people are out here paying $2,000 and $3,000 and $5,000 for this advice that's being dispensed, and it's just not accurate. They're going to go out there and do themselves more harm than good. They're going to extend themselves in such a way. They're going to look up 6 months from now and be no further to go, and maybe even be further behind than when they started out, right?
Mhm.
What are some of the other errors and mistakes that you're seeing that entrepreneurs are making that concern you, that need to be addressed, particularly for those who just might be in distressed situations and they're just looking for an out, man. They're looking for any way possible to improve their situation. What are some of the pitfalls, and what are some of the things that can gobble you up or mess you up in a real bad way?
Okay, so I have been hearing people charging people large dollar amounts for EIDL applications for which they don't even know what the person put on the application.
Mm-hmm.
Which means that they lied on your application. If you don't know, if you didn't tell them, and they're charging all this money, and the government has a legal cap of $2,500. So if somebody is charging you more than $2,500, it's just not allowed. They have to actually turn in a form to the SBA itemizing why you charge more than $2,500 to help them get their EIDL.
Mm-hmm.
PPP, people were just lying and putting numbers on there. You can't do that. Don't let anybody do your application. Do your own application, or at least know what numbers are on the application, because you are going to be the one that goes to jail if it was a lie and you got a big old dollar amount. I didn't know what the person put on my application defense is not going to work. So you want to kind of know that. I've been seeing a lot of people say, well, they said they can just give me this grant and this. And I said, well, what was on the app? I don't know. They didn't tell me. Why? Why did you let them do that to a government application? So that was one of my things that's one of my pet peeves. Do your own app, know what's on the app, period.
Yeah, especially with those grants. At some point, you're going to have to report what you did with that money, how you spent that money, and part of that, I remember even with PPP, you've got to re-verify that was the money you were supposed to get. So if you are just getting money and now you're not able to properly document what's happened with this money, yeah, that's a world of hurt you don't want.
Right. It also, you just don't want to be caught lying on a government application. Even if you didn't put the number on there, it's still your application. So make sure that you know what's on your application.
So something changed over the last 6 months. It wasn't last 9 months that caught my attention, right? And the initial wave of stimulus dollars that were pumped into the economy, nonprofits were kind of left out in the cold, right? A lot of things have changed over the last 6 months, and the last 3 months in terms of how monies are available for nonprofits. Right? So I come across a lot of individuals who are nonprofits, and they say, "Well, I couldn't apply because I was a nonprofit," and I was like, "I don't know if that's true anymore." That wasn't the case, right? Um, Elaborate a little bit. What type of opportunities out there for nonprofits to acquire funding?
So specifically, the EIDL is for nonprofit or for-profit.
Mm-hmm.
The nonprofits get a 2.75 rate, when for-profits get 3.75. So EIDL is specifically meant for nonprofits. So they will get the grant part and the loan part as well. PPP if you have payroll, you still can get the EPPP on a nonprofit. So there's a lot of stuff. But also there's so much money out there for technical assistance providers, nonprofits, grants, so that you can help others. So if you're doing something and you're helping others and you're a nonprofit, there's people that want to pay you to do more of that to help your community. So you got to just start applying for the grants.
All right, fantastic. And so I have here Tuesdays at 5 p.m., Wednesdays at 9 a.m., right?
Yeah.
So people can plug in and start getting credible, good information. And look, for everyone listening, this Williams is not going to toot her own horn, okay? So I just got to do this for her. Miss Williams is not that gal that watched one YouTube video, read one book, out here dispensing information, okay? She's been an entrepreneur herself. She's been helping other entrepreneurs navigate these waters for almost 2 decades now. One of the sharpest, brightest, just high integrity individuals I know. You owe it to yourself. Look, that's going in my calendar standard now. Even if I'm not plugging into it every single time, it's going to be on my calendar every now and again because iron sharpens iron, right? Not iron. That's a misnomer. They say iron sharpens iron. No, you be hanging around a bunch of dull knives getting some real bad information. No, sharp iron sharpens iron. So definitely you owe it to yourself. Make it part of your weekly curriculum, habit, routine, whatever itinerary. Make that call a part of what it is you're doing. So look, I'm always excited to see Ms. Williams. You've been crushing it for so long, been so helpful. I've learned directly and indirectly so much from you. And I'm so glad you were able to make it back and spend some time with us today.
Yes, thank you.
Thank you for having me.
All right, Next Up Social fam, we teased out next week's episode a little bit, but definitely make sure you put those. We will make sure we put in the show notes of this, the links to QT Business Solutions and the Facebook page and all that so that you can tap into those as well. And until next week, we will talk.